Welcome to TheoTrade. This is Don Kaufman. It's October 4th, 2018, and you are watching the Theo Night video. It's moments after the cash close, the entire market seeing some fairly tumultuous volatility inside of today's trading session. But I'm going to show you a few aspects that you, may or may not necessarily be aware of. We're also going to discuss a couple of positions that we currently have on, a few positions that you might be enticed to want to put on. First and foremost, S&P futures, they're down some 24 handles, which really amounts to, right? Let's just throw it in perspective over here for just a second, because everybody gets ahead of themselves anytime we see a degree of volatility. People, it's 0.8%. 0.8%. You know, we're not even what I would term statistically significant until you start getting in that wheelhouse of like 3%. And today is a perfect day to kind of stand back from the screen. You have to put stuff into perspective. You got to put stuff in terms of percentages. What would a 3% move in the S&Ps even look like? And by the way, 3%, that's not a catastrophic move. That's just the beginning of what we would term significant. So, you know, at a 1% move, well, we had that today at one point. We touched all the way down to 28.87. You know, the fact of the matter is, to get a 3% move, you're looking at the S&Ps, you know, moving 80, 90, even 100 points in a trading session. Okay, so I want to show you the volume inside of the S&P futures. The volume actually took off to the upside. It's about 2 million contracts traded in the S&Ps. And we'll come back to the 1-minute chart here for just a second. I mean, today, it's one of the first times that we've seen volatility kind of emerge, well, in quite some time. You have to go all the way back into the time frame of late June to see this kind of activity inside of the S&Ps in terms of volume. What that in effect tells us is a whole lot of hedging activity going on. But now let me get into a couple of details here and really start to drill down. First and foremost, intraday. On an intraday basis, I'm going to kind of draw on the screen here a little bit. The S&P futures took off to the downside. The line that you see drawn right across your screen, okay, that happens to be 29.11. What does that represent? That's what we call here at TheoTrade a gravity point. What a gravity point happens to be, it's kind of a seam between both buyers and sellers. It's big trading firms on multiple sides of a position. But that seam at 29.11, it's kind of where delta risk is very happy. And what you're likely going to see in this evening's trade, you know, so the markets right now are effectively closed. I mean, officially the futures close in about 10 minutes from now, but we're probably overnight going to trade right in and around and kind of scatter right around that 29.11. And that's a number that you're going to hear a lot of. And again, that is the equivalency of a happy place for some very large trading firms. So mark it on your screen. 29.11, it's not so much about the 2900. That's just a big psychological level. Okay, the 29.11 though, that's where risk kind of gets happy. Now, back out for just a second here, and I want to go to a 30-day 1 hour. In a 30-day 1 hour, okay, you can kind of get a little view of some of the damage that was done in today's trading session. Clearly, again, when you're looking again at this 30-day 1 hour, you can see how very important, okay, that, and again, it's the same line, that's that 29.11 kind of handle. It's been kind of a key inflection point in much of the recent trade. Over the last 30 days, it's been the inflection point higher and or lower, and kind of bisects the screen pretty much, I mean, dead across there. Now, the point that I really want to make with today's sell side activity, it's not so much that, all right, we saw a little volatility emerge. Granted, I haven't even talked about the Nasdaq, which I'll come to in a couple of moments over here. What it comes down to is, yeah, maybe you saw the volatility spike a little bit, but do you recognize, and I want you to understand like the full, you know, I guess gravity of this situation. You have the S&Ps down 0.8%, yet one of your largest sectors actually finishes the day up 0.7%. This, okay, is a capital rotation. Nothing more, nothing less. But I got to tell you, So where's the capital rotating from or to? Well, clearly it's out, okay? It's out of the monsters of tech and into financials. But this is where we get into a little bit of a problem. If the financials are our lifeboat, okay, is that a lifeboat that you really want to get into? Especially when interest rates and bonds are all over the place. Now, again, this has been a marketplace that we have yet to even discuss bonds. And that's what sparked all of the fury and volatility in today's marketplace. Look at the bonds. But the irony of the bonds getting whacked back, and this is absolutely hideous. The irony of the bonds getting whacked back, the financials, okay, are not faring poorly in this. In fact, today, at one point, they had rallied substantially. Look at this thing out of the gate. The financials took off to the upside and then came in throughout the course of today's trading session, only to see a little bit of a late day bump back to the upside. But the point that I'm making with this, you had the S&Ps at one point today. They were down 40 points, and the financials were flat on the day. Okay? Why am I keying into this so much? Because we're not even close to seeing correlation. And we're getting to this point where we passed scary. We're going to and again, people are not going to understand this, the full, grasp of this until you see it. What is this market? What's it going to look like when the advanced decline line correlates? If we had 90 products down today and only 10 up, you got 36 products that are up today. You want to know what those products are? All of them on this screen that are green, for the most part, it's insurance companies, it's financials. They're up 0.7%, and that's one of your biggest market caps. So you have this tremendous market cap holding us up, yet we still finish the day down 0.8%. That's why I'm telling you, you better know what your positions are right now. You better be aware of it, because if the market all of a sudden just snaps this end of this garbage sector rotation, because this is a veritable slop fest right now. When you see an advanced decline line that's like, 30, 60, 60, 40, that's slop. It's slop trade. We're not correlating. Markets are nowhere near ugly until they start to actually, breathe together, meaning that they get fully correlated, that they start seeing, 100 products trade to the downside. Right now, again, we're just slap happy, sector rotation. Check it out. Rotate into the financials a little bit into the utilities, okay? Which, by the way, rotating into the utilities today makes absolutely no sense other than its defensive mechanism. And when I say it makes no sense, who wants to buy a utility when the interest rates in the 10-year are actually going up, right? Again, cats and dogs living together. You got utilities to the upside and financials to the upside and bonds getting rocked. You think that bonds getting rocked, it's going to negatively impact some financial companies out there. But right now, nobody cares, okay? Because there's nowhere else to hedge and to run to. And again, we're just not seeing markets that are correlating. I cannot stress this enough. A broader take on the financials. We were looking for a bounce in the financials. We got a bounce. I would start to expect, the possibility of some more sell-side activity hitting the financials in the days to come. I continue to hold a longer duration in the money put position on JPMorgan. Okay. This position that I happen to have is out here. We're at a 92 delta. It's the 125 puts. I just purchased them. Again, we're using a deep in the money put as a synthetic short stock position. All right, next, let's come over to the home builders. You're starting to get to record numbers in the home builders. What's the record? Consecutive numbers of days down. The one thing you better be aware of, though, in the home builders, the volatility is not like crazy high. So the volatility, the IV percentile, or what we call IV ranking, hasn't really taken off much to the upside. Frankly speaking, I'm looking for a bounce trade in here. Now, a bounce trade in the home builders, again, how many down days in a row does you have to have before you're looking for a bounce? Apparently a lot. A bounce trade in here. I've been pricing these bounce trades, throughout the course of the day. The problem you have, the implied volatility skew, it's absolutely hideous. Okay, what that means is the implied volatility that you're buying, and I'm just going to highlight this for a second, the IV that we're buying versus the IV that we'd be selling. We'd be buying like a 19.5 implied vol and selling like a 17 vol. Unfortunately, that does not bode well for us in this particular strategy, because this spread is about, just under $1 in the money, yet the spread's trading for $1.09. It just doesn't make a lot of sense. The skew is not favorable for us to put on a bullish strategy. For those of you, if you wanted to put a bit more risk on, you could use a deeper in-the-money call option looking for the bounce trade. All right, a deeper in-the-money call option looking for the bounce trade. Again, you would have to come into something like these 35 calls. You could probably even get away with these 35 halves, but the bid offer spreads, even in the 8-day options, they're a bit wide. You got to have the marketplace open. You're going to have to probe markets very, very carefully. Again, that is looking for a bounce or a bullish trade inside of the XHB. Shifting gears here a little bit, let's look at Home Depot. I talked about shorting Home Depot. I've talked about this over the last 2 weeks. I stressed it over the weekend video. Home Depot got whacked back. If you didn't get into the Home Depot trade, I've also been stressing Lowe's. Lowe's, okay, we are in a Lowe's trade right now. What does a Lowe's trade look like? I am all the way out to January, again, using a deep in the money put. The deep in the money put, why am I doing that? I'm kind of swinging for the fences here. The interest rate rising is whacking the home builders. Well, sooner or later, somebody's going to look at that and think to themselves, hey, why are we not getting into the home improvement business? Meaning, why aren't we crushing the home improvement, as higher interest rates are not going to be good for a Lowe's or a Home Depot either. Last, but definitely not least, in this evening's video, I want to talk about the XRT. The XRT is working in our favor. Nothing more, nothing less. We've rolled this a number of times. Again, this is actually, without unequivocation, the largest short position that I currently have on. I have a number of expirations, a number of different positions in here. I'm using deep in the money puts. Again, suffice to say, been in this one for quite some time, and it came down to literally 2 to 3 trading sessions has put us in a big profitability type position inside of the XRT, which if you've been listening to any of the weekend videos over the last few months, I'm telling you, that's the top performing sector out there that was riding neck and neck with the XLY. The XLY also comes off in a huge way, all in the last 2 to 3 trading sessions. It's a lot to think about. Mainly, okay, at a point in time like this, people, get your risk in check. Recognize that a 25-point move in the S&P futures, okay, it isn't even skinning its knee. Just take a look at the S&Ps, all right, just year to date, and you start to really get a feel for that, all right? We've come down what? Nothing. It's a negligible amount. And if you take a look, we did not even hit the edge of the expected move in today's sell side activity. With that, I want to thank everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.